So where are we with the stock market today? You know, there's been all of this talk about the tariff market turmoil, right? This trade war continues to push on. The markets have been reacting. We saw what happened yesterday, and then we want to take a look at what's happening today and just kind of break it down day by day, and it's going to keep changing here as we go. But are the markets reacting with sort of the gloom and doom that many have been predicting? So joining me now is Jason Brown with the Brown Report, and we thank you so much for your time today, Jason.
Amy, excited to be here.
All right, so I wonder if Amber, you can pull up the what we're looking at in real time here with the markets, and Jason can take a look, and you can walk us through what have we seen so far today, and then where are we at this very moment. And if you, oh, there we go. All right, how are we looking?
So the good news is that there's a green triangle in front of the Dow Jones Industrial Average, which means that it's up for today. And if you've been watching over the last few days, we've been having major sell-offs. And so the last 2 days, we actually had somewhat of a rebound in the stock market. And that should be providing some good news to traders and investors. And so you may be saying, well, what's good news? Because I don't like to talk in blatant terms. So from a good news standpoint is, I like to teach people that you will know when the selling is done once people start buying. And so you had a huge sell-off yesterday, but people came back in. When I say people, could be individual investors, institutional investors, traders. They started to come back and put money to work, which to me signals that at these price points, some of these stocks are getting ridiculously cheap and looking like a bargain.
Yeah, because there is that, you know, everybody's in a different position, and there are some folks out there who are want to dabble. They want to get in as prices are falling or have fallen, and so they're watching this closely. I know a lot of people, you know, you look in your crystal ball hopefully and say, oh, the bottom's going to drop out on this day, which is not possible. So as we're following these trends, I mean, what do you look at this and go, we're already starting to bounce back up, or could it keep going down?
So here's what I want to share with you. I shared this with our traders inside Prowell Trades University last night. You said something I think is very important. You said, do we look at our crystal ball and just say, hey, is this a good time to buy? There's actually not a crystal ball, but there are technical analysis that'll tell you with data why it might be a low risk time to buy. And I want to give you some of those points here. I have them pulled up. If you look at the VIX, which is the volatility index, which basically measures fear, which is how afraid are people in the stock market based on how quick, how fast they're selling their stocks. The VIX, each time it's spiked above about 45, the VIX, that only happened, well, I'll give you the exact date. It happened a couple days ago, April 4th, when Donald Trump announced that reciprocal tariffs could be up to about 50%. If you look at August 5th of 2024, VIX spiked and went as high as 66. And if you go back before that, in 2020 when COVID hit, VIX had spiked and went as high as 82, the 82 level on the VIX, which means it was above 40. If you look at each one of those periods, that was the bottom in the stock market, which I'm saying the S&P 500. You can go back and look at those exact dates. That, or within 3 to 5 days of that was when the market started to bottom out and people started to come back in and buying. So we just saw the VIX spike above 40, and I think it went as high as, let me look at the chart, it went as high as 60 2 days ago. It went as high as 60. And so I believe that we are starting to see the bottom form. You won't know it's the bottom until you look back, but there are technical indicators like the VIX that statistically, after they've spiked above 40, we've seen that to be the bottom, and people start to buy, and we look back and say, that was the time to put money to work.
Interesting. Okay, yeah, I had never heard that before. So the higher the VIX, the higher the uncertainty, that's actually a time when folks might want to consider getting back into the market or buying low.
Yes, because with that high uncertainty, people basically lose all their investing common sense, and the fear just takes over, and they're like, get me out of every stock, everything I'm in. I don't care what price, and people start to sell at ridiculous prices. Not only that though, there's also institutions that get called out on what's called margin. So if they had any stocks or investments that were on margin, As stock starts to sell off, those companies or investments or hedge funds, they have to sell other positions to fulfill their margin or their debt obligations. So sometimes they're forced to sell good companies even themselves, which adds a little bit of fuel to the fire. And now that they've satisfied their debt requirements, they start to reposition or rebuild their portfolio. So you got a mix of regular traders who let fear come in, and then you got a mix of professionals who might have to satisfy their debt obligations, which creates what's called a capitulation, or that final push, that final flush out of selling, which also spikes the fear up to its highest point. And then once all that happens, there's no one left to sell for the most part. There's just time for people to buy. And there's also typically nowhere left for stocks to go, because they're not going to go down to zero. They still have a utility value. They still have companies. They still have a use in our society. And so typically all the bad news is baked in, and you start to see the market turn around.
Yeah, because that was my question, is if you're waiting for this spike and you buy in, like, what's the downside to that? What's the risk there?
The risk is you don't really know how long you're tying up your capital for. So do you know if it's going to, if you look at COVID, it took about 10 to 12 months for us to pull out of that. Yeah. So you don't know how long your money's going to be tied up for as you start to buy. I think the second risk is the bottom isn't a one-time event. So it's not like, oh, Jason Brown said the VIX went over 40, that's it. We're still going to have days where we're up, we're down. Yeah. News is going to come out. They're going to revise GDP numbers, etc. Earnings are going to come out. Things aren't going to look beautiful immediately. So you're still going to have to go through some ups and downs in the market where you're going to be questioning if you made the right decision. And speaking of the right decision, if you are putting money to work on companies who were not well capitalized, who do not have a great business use case, who does not have great management to weather the storm, you could be buying companies that will not be part of the companies that come back. So those are kind of like your three risks: not knowing how long your money's going to be tied up. Number two, sitting through a little bit of up and down just when you thought it was all over. But remember, it's not a one-time event, it's a process. And then number three, the risk is making sure you have a strategic way to pick your investments or how you're investing for retirement, so that the stocks that do come back, you are part of those stocks. And just a simple way to do that is just think about the stocks that are in the S&P 500. They're the top 500 globally rated stocks across several different industries in the U.S. economy.
I'm glad
That's just a simple way
go
to
ahead.
do it.
Go ahead. Yeah, I'm glad you brought that up. Retirement. So there's a section of folks who are in the stock market. They've got time to play. They've got time to wait things out. And then there is the portion of the population that does not have a lot of time, say, before retirement. What's kind of the cutoff for you? If I've got like a year left before I'm retiring, 5 years left before I'm retiring, at what point do you kind of stop and not play around anymore?
If you have a year to 2 years left for retirement, the way you want to be thinking about that before now, not when the market sells off. So what some people like to do is they take a portion of let's say you have $1 million for retirement, and you're going to need $100,000 to live that next year. Some people will move $100,000 of their investments maybe into a CD, maybe into a treasury bond, something that's not directly correlated and tied to the stock market. So when the sell-offs and the pullbacks and things like that happen, they still know they have that $100,000 maybe in a guaranteed or low interest rate savings account or treasury bond or CD that they can access a year from now. And so they technically will have maybe 1 to 2 years before they have to sell any of their investments to fund the next round of retirement. So you kind of want to be thinking about that before you get to the point of needing the money.
Okay, there's so much to parse through, but as as you're taking a look at what's happened today, some of the predictions, last week that we're heading into a Black Monday / Red Monday, whatever they're calling it now. How are you feeling about where we're at right now, and then sort of as we head into this week? And I know so much of that is dependent on the hairline trigger that is the tariffs and reaction from other countries.
Well, from a data standpoint, I love using data because in these times your emotions can really get the best of you. If you look at what happened during COVID-19, we had a global pandemic, the world was shut down, the market sold off, it was roughly about 33%. Right now, we do not have a global pandemic. The world is not shut down. We have manufactured tariffs or manufactured inflation, and the market is already sold off roughly 22%. So I don't know that there's anything happening right now that would give us that extra 10% sell-off to be on par or as fearful as a time when the entire world was shut down and we didn't know what was going to happen and we didn't have a cure for it. So that's number one. Number two, we actually already went through a recession. And this is one thing that bothers me about the financial world, or at least the way that the government portrays it. A recession is quantified, or the definition of a recession is 2 negative quarters of GDP in a row. We actually had 2 negative quarters of GDP in a row, and nobody wanted to call it a recession when we were going through and coming out of COVID. No one wanted to call it a recession because they didn't want to scare people. They said, well, it's not a real recession because we have all these job openings, right? And so I said, I didn't know that you could modify the definition of a recession to fit the narrative that we needed for the government. And so they said it's not a real recession, so we're not going to call it a recession. So my point is, we had a real recession, nobody wanted to call it that, and everyone lived through it and the market went higher. Now we're fearing a possible recession, which means we would have to have 2 negative quarters of GDP again. The question I ask is, will they even actually call it a recession if we have one? Number two, when we had that real recession, we saw the government step in with lower interest rates, giving people checks and doing what they needed to do to stave off a real recession. This would be a manufactured recession, one that we're imposing on ourselves due to tariffs. I can't imagine that the government, A, wouldn't step in and just do something as simple as remove the tariffs. B, we still have federal Jerome Powell who can lower interest rates. So we still have bullets in the chamber, if you will. We still have options or different things that we can do, even if we did go into a real recession, which the last one we went into, they didn't want to call it that, and we survived it.
Wow. Okay, we just talked for 15 minutes about the stock market, which is something I never thought I'd be able to do, but I have so many questions, and we really appreciate the way you explain things. We want to bring you back on maybe Friday and have you walk us through things in a couple of days, because as we know, so much can change, even from hour to hour, minute to minute on this. So would you come back and talk to us again on Friday?
Would love to be back, and it's an honor to be a resource.
Thank you. We really appreciate it. Jason Brown, the Brown Report, you can find him online. Thanks for all of that insight very much.
Thanks for having me.
You bet.